when it comes to Netflix. If we can switch gears to Netflix, when the streamer rolled out its new tier-based pricing system, investors were skeptical about the positive impact that it could have on the company. New data from Antenna suggests that consumers have not been put off by advertisements. Daily signups to the streaming company have reached an average of 73,000, while cancellations also saw an increase by 25%. So what can investors take away from this? Will other streaming platforms adopt more tiered pricing systems and include more advertisements? MNTN CEO Mark Douglas is back to discuss more here. So what do you think is the kind of net out of this and the tiered pricing strategy that has moved forward? Is it a zero-sum game, or is it kind of a rising tide type of game?
No, it's a zero-sum game. So the brand advertising business, we're talking brand television advertising in the U.S., that's about a $70 billion market. Worldwide, I think it's something like in the $160 billion range. It's a zero-sum game. It is not growing. Growth rates for these big brand advertisers literally are about 1%. So annually. So for Netflix to gain market share or anyone else to gain market share, someone has to lose. It has to come from another broadcaster. And so the Netflix has the strength, meaning that, they have the user base for it. They have the shows for it, the kind of big shows that these big brand advertisers want. But the anyone else who wants to jump in that game, it's a struggle. They have to, the list of networks out there, they just have to, that money has to come from someone else. So it's a fight. So I think only Netflix can really win that fight. Disney, obviously, also in that realm, but anyone else is going to struggle to gain the kind of traction that those guys can coming into ad-supported streaming model.
Again, looking at it from the advertiser's perspective, Mark, what do they want? Is it just a matter of size, that they want the most eyeballs? Is it a matter of the best data, whatever the best data means right now? What do they want?
Yeah, so in the television realm, you have to think of it as two markets. So one market, the buyers want ads, and they want those ads on the best shows. They're just trying to build, affinity for their brand, continue to expand the reach of their brand. And so that's what they're looking for. And that's why you have things like upfronts, and you spend $1 million filming a commercial, a lot of things that don't make sense, right? You don't need an upfront for, to advertise on Instagram. You don't need to spend $1 million on an ad. So those advertisers, that they're looking for something that's unique, and they want it on the top networks, on the top shows. The rest of the market, which is actually 3 times the size, just wants eyeballs. They want people to come to their brand. And that's why Google AdWords is so big. That's why Meta's big. And that's what MNTN does in terms of performance advertising on TV. So, again, someone like Netflix, they're initially appealing to those big brand advertisers. To keep growing that over time, they're going to have to start to also compete with Google and Meta, because that's where, that market, which is performance advertising, direct response, is 3 times larger. But it all starts with, upfronts. It's just so attractive to them that they can, in 1 week a year, they can pull down $1 billion of revenue in an upfront. It's really hard for them to walk away from that. That's where they all start when they enter the brand with the big TV markets.
Makes sense, Mark. Good to see you. Mark's MNTN CEO Mark Douglas. Appreciate it.